Hey, what's happening, guys? I think that stream should be working. It's my first time doing YouTube live, so check it out. Let me know if there's any issues. If the quality's really shit or anything like that. Let people trickle in here. Let me record this. Making new lows right now. We are confirming the lows too. So right now when we broke 4480 on SPX, we are trending down. If we sustain that through 1030, looks like we are going to sustain that, and if that's the case, I'd be looking for around 4455 SPX. Credits on like the 4490 calls same day look decent. I'm more interested if I do some credits on going out towards like end of week and playing that 4500 magnet initially, and next week playing above 4500, like something like a straddle swap. We still have a bunch of people that haven't got moved over from Slack. I don't know. They're probably just not at their desk this week. But in any case, I'm going to give it another couple minutes before getting into everything. Overall, there's nothing I really like adding on a swing basis yet. We're still in our energy swings. The Roku pop was phenomenal today. If you're still holding the 100 calls, I mentioned I wasn't selling anything that was like less than a dime or a quarter. I took those off at the open. It's not on the trade log. It has nothing to do with our current positions anymore, but was a bailout. Nothing really, an A+ setup or anything with the positions we had on. That was a time crunch at that point. But I know some people were still involved, got some later strikes, played it with the right times, and looks like we got the first leg in what's going to be this next primary up. I tried to put my whole screen. I got 3 screens I use, and they're pretty big screens. But when I put the full screen on, it looked really pixelated. Can someone just go in the subscriber chat and let me know how this one looks? This is just the quad box when I'm watching ES intraday. Does anybody Is anyone on the live stream on YouTube? Is that even on?
Yeah, it's on.
Okay, how's that looking though? Like, is it super pixelated? Because when I had the full screen up,
No, it's clean.
it's like over 4K resolution on a really big screen, so it looked really shitty. All right, cool. So that one looks good. So yeah, this at the moment is looking like we're going to be in a trend down situation. Just on my intraday charts, it's in the video I posted on the first educational video. We're going to be posting a lot more videos over the next couple months. I'm going to try to do one of the larger ones every week. But over here you can see we are confirmed. So this is the most recent high. This is the move down. We had unconfirmed lows into this move, and now we're confirming the lows. Over here, going to test. This is the 20-day right here. This light blue line. These are my intraday charts. So the levels you're seeing pre-market from those reads I use a completely different charting platform and have those separate, because I don't want to, when I'm looking at the intraday setups, I just kind of want to see the price action pretty, without looking at anything else on the same day setups. So over here we are confirming on 15 hourly, and I got some non-confirms on the shorter frames, just telling me this is going to be, if I'm just looking at this, I kind of have a different take beyond just technicals when I'm using the model. This is going to kind of be a slow grind down, I would think, unless we were to stop and pivot at 44.70 right here. We're right at the 10:30 rebalance. This is the only spot today over the next 30 minutes where we could put in a significant reversal. I would not lean towards that scenario. Right now it looks more like we have unfinished business lower, especially below 4480. Below 4480 has sell side implications until we reach lower strikes like 4455 and 4450. We have to get back above 4480 in a very short period of time for me to not lean towards additional downside here. I was a little late this morning. I missed some of the initial flow, and then it kind of just lost that data for some reason on the AM and the open, and it was a little wonky off the open, but at the moment I do have a pretty high confidence path that we're going to be heading to, at least the 20-day, probably closer to well, this is ES, so it's about, what's it, a 5-point difference, no, 6-point difference right now. So yeah, around 4456, 4462 ES, which is right around the 20-day. That's what my target would be for the day. And it's also, it matters, like, if we're going to be looking at how do we trade this, if we even want to, how we come into that zone. And it doesn't look like a clean setup by any means. Like, we're going to go straight down 10 points. The only way I'd be looking to possibly take any shorts, barring a complete reversal in this next 30-minute window, would be if we got back to 4482 around this area, tested it and rejected. So the last week this OPEC cycle, we did have a nice pop last week, but overall it hasn't been the cleanest, in my opinion, as far as positioning and the flows I like to tail when you have wind at your back, compared to being stuck in the mud and or having fragility when you're in a complete sell heavy OPEC cycle. This has more been we had some wind at ourselves initially after the end of last OPEX. Let me mute that mic. YouTube audio seems to be delayed. Let me see if there's a setting here. This OPEC cycle hasn't really been the cleanest, and overall I'd really prefer if we had more sell into the September OPECs and the week following to set us up for the Q4 rally. So it looks like a lot of things have bottomed or are in the process of bottoming off that correction we saw during mid to late August, and we're gonna have the best and most decisive, confident flows if we see sell side reaction that doesn't break anything, which is always the case and kind of been the theme all year. Get everybody, all worked up, buying the wrong strikes, going way too far to the money, and it gives us fuel for extended periods of time. And we're going into the quarterly expiration this month. I wouldn't expect anything major on the upside or downside into this OPEX. In my opinion, this looks like we're gonna, have this pullback. We have an incomplete pullback clearly, unless we sustain a break of the 20-day and 4,450 SPX, which would be your short signal to really, get more involved in shorts and really have a stronger bias, because that's where the work is definitely pointing towards additional downside if we do break 4,450 SPX. Unless that happens, and that's not my lean, we're going to be stuck around this 4,500 magnet all week. Maybe get above towards Friday. What's it? We're missing a day this week, so yeah, if we completed the pullback here by end of day into the close, by tomorrow's open, we start rallying to 4,500 maybe. Still, this is all speculative. We have to see how the day unfolds. And then on Friday, we'd have a chance to start moving towards 4,540 and 4,550. But in my opinion, that move's not coming until next week. We don't have a ton of fuel on the upside. We just don't have enough. It's more stuck in the mud setup than anything, and it's not really conducive of straight delta trades and letting your winners run in this situation. We want to for trading intraday, take your hit and get out. If you're a premium seller, this is your time to shine. I would be looking to maybe do like a 4,500 straddle credit end of week, 4,500 straddle debit for next week, something along those lines. That'll be more lucrative, selling the 4,500 put for this week, long the 4,500 put for next week. And then if we had to close around or above 4,500 by end of week this week, it'd be a very profitable trade, with the risk of that trade just being the debit in between the two strikes, and we're not looking to hold the 4,500 for the OPEX XP until expiration. We're just trying to get 4,500 on this week. $4,469. We're in the rebalance right now. Ready seeing premium sellers come in on the downside, but that's not necessarily a reversal sign or something you want to see if we're in a trend down situation. These are retail orders, not the market maker. The dealer actually is going short Friday XP 4550 puts here. That order just went off against 4550 puts. That's actually a really interesting trade. I posted the trade. It's credit, 45.50 put, 908, debit, 45.50 put, 929, net debit, 1025. So that's kind of what I was talking about with the 4,500 strike, and that was a dealer executed order. Just so you have an idea, you'd be looking. So you're really not risking any. So the debit is the time value between the two strikes. Keeps going down, you're not losing really any money. The only way you lose is if it keeps going straight down and you hold till expiration. And honestly, you probably wouldn't lose. Be a very marginal loss. You are looking for by Friday or whatever XP. I think this is Friday. By Friday XP, that front month. Here, let me mute that person real quick. You're looking for that front strike that's a credit to become a zero or as close to zero as possible, so that you could take in the credit and you own the back. You either hold the back and you have a hedge that's basically paid for and you already have profit banked, or you just take the trade off and you're able to hold that trade till expiration because you have the back month, but you're not looking to hold it. It's just advantageous in terms of margin having the back month if you're going to short that far in the money. Oh, I deafened him. Sorry. Okay. So yeah, that's the exact type of trade I was talking about for the 4,500 strikes, doing something like that. I don't always post these trades. This one's not going to be as complicated because sometimes it can become a bit more complicated if you're doing like multi-legs beyond just the two legs, and you have to delta hedge at some points. But that's the kind of the stuff I want to get into with the educational material. It's a bit more advanced, and I'm not going to start there. You need to understand the basics, what strikes you want to pick, and I know not majority of you aren't modeling markets, and you don't need to be modeling markets. And if you just look for positive EV in these trades, you don't even need to be doing technical analysis. Technical analysis is, it has anecdotal. It's anecdotal support for me at least. Like I do only like to take core trades when everything lines up. There are certain theories and TA structures I'd like to follow, and I'd like to see as supportive evidence when I'm matching things up to what the picture is in the option surface and the flows. But if I just traded off TA, it lost a lot of its edge once we started post 2008. And that's mainly because all these moves are being dictated by the option surface over what's happening on the open market. But you don't need TA if you're you can interpret different sets of data without doing full-blown real-time API models like we're doing. You just need to take, like, at the root of it, if you don't want to do the craziest stuff as far as models, you just need to see which trades you take produce positive EV. Like in these setups, when it has these variables, and if I take these trades over and over again, do I have a higher success rate taking this over something else, and what's the probability of having potential returns? Positive EV is probably where I would start if I was just starting all this stuff. But yeah, I'm getting on a bit of a rant. Let's see what's going on here. We're still chopping by the lows. Like I said, if we do end up going lower, I don't think this is going to be a straight shot. It's going to be pretty choppy action with some 5 to 10 minute burst down. It's not going to be. It'll be trend down, but it won't be just a free fall. I don't think it's going to get like a major catastrophe today. We're just going to complete this pullback, or maybe not. Maybe we break 450. Again, I don't think that'll be today. I think we're going to test it. It's very unlikely that we can sustain below 4,450 XPX intraday. It would take an immense change in what's currently sitting on that strike. And in like an hour or two, I would probably tell you it's close to impossible, unless we had some sort of news. So yeah, in terms of intraday, if we got back to like 4,480, 4,481, which lines up exactly with 4,475, 4,480, which was the resistance on positioning, and where the sell pressures are coming from on the option surface, that's where I would want to re-enter, or where I'd want to enter a short. If I was looking to trade this intraday, right now you're shorting the lows. I mean, it could work. It's just not a really great risk reward setup to be hitting it on the lows. If anything, I'd probably be selling calls by that zone I just mentioned if I was trying to do something right here. Because he's backing off a bit. We're at about 70% of the expected range today on ES already. We'd be at 100% exactly at 4,450. Thought this was going to be a better day to hop on, but looks like we're going to be in a slow grind lower. If you guys want to pop in the chat and ask any questions while we're hanging out, feel free to. Oh, this read didn't get posted earlier. This is the meta read. I don't know why that didn't get posted earlier. The guys that were in Roku, do you guys take your exits, or are you still holding? I know a lot of guys had October strikes. I think October's going to be fine, but anything September, you wanted to probably take the money at the open there. And this is like the best. It's never. So how we were trading in that mid-August cycle is I was expecting a much shallower pullback. I thought we were going to have supporting flows a lot earlier, and clearly there was something dampening the flows. There was some macro overhang, and there's still a lot of macro bros positioning for end of year and rolling out the quarterly expirations. And I can see what's happening on the option surface. I have no idea when a macro whale comes in, or these CTAs. I always get pings like CTAs have this much to sell, or this is going to be happening here, and it never fucking pans out. Like, I remember during that mid-OPEX, when I was towards the end of August OPEX, there was a guy in the group there's a lot of people in the group that are still professionals, still work on the street, small family offices, different funds, and he was like telling me he's hearing CTAs have to sell like this amount of notional early September. Like, why the fuck do you think? He didn't say fuck, but he's like, I see no fucking way that this market's gonna find a bid after OPEX. And every, like, the CTA and all that stuff, that's like, you can't model that. You don't know when someone who's holding Apple stock or XYZ is going to make a move. Like, I can't try to make assumptions on that, and I have no clue. I hear shit like that all the time. I don't think that's true. Like, I told them, like, maybe, but like, we get back above the 20-day, they're not. Like, a lot of dynamics change above and below the 20-day. You think a lot of these funds models were so sophisticated, but most of the modeling we're doing, I guarantee you, is more complicated than majority of the hedge funds out there that are investing large amounts of money. They're not doing anything super complicated, but most of the time, they're long. They just hold long, and they're investing for the long term. So they throw a tail risk hedge on there, and there's your hedge fund. But yeah, there was talks about CTAs having to sell this much amount of notional, after the OPEX, when we didn't have as much supporting flows. Everyone seems to know, post OPEX weakness and all this bullshit. Expiration is the start of volatility unpinning, and this week's supposed to be the most supportive. Yeah, well, they're not. If you just keep saying blanket statements like that, like, I know that you have no fucking clue what you're talking about. There's a guy on Twitter that Zach was pinging me. Like, he was saying, like, yeah, we're going to have support this week. It's never that, like, it's never that simple. Sometimes it is. Like, if you look over a backtest of, let's say, till March 2020, when options really took over, a lot of the times it was that simple. But, people have been very outspoken, and everybody knows these generalizations. Not everybody, but a lot of people do, and the game changes. Like, it hasn't been as supportive during these windows that are supposed to be supportive, and we I can see that we don't have the same flows that we did. Even last month, it looked like we had more support in this stage of the OPEX cycle, and you have to. We went down, but you have to look at how those days traded too. Like, we never were really completely off sides until I had that, like, doctor's appointment right on big expiration the day after. Like, that's when vol unpinned, and it can unpin both ways. Everything was kind of in the mud, but before that, we were like down, I don't know, 50, 60 points from where I started entering things. As far as ES, Theta, different story. It was, we were getting burned on Theta, but we had supportive flows that were clearly dampened by something happening on the macro, and here we don't have as much supportive flows, but at the same time, it's not negative yet. It will become more negative below 44.50. I don't think that move would be sustainable, and I also don't want to be biased like last month, like buying into this right now and saying we're good, we have supportive flows coming in soon, and yada yada yada. I want to make sure that we're above 4,500. At least have, put in some. The best buy is never off the first low. Like Roku, that was the first leg up. I posted the levels that we want to get involved at, which is 87.50 to 85.25. That's going to be an A++ setup if we see those levels again. That's going to be, slam the fucking table, buy your leaps, buy your October, buy some shorter term, buy your leaps. that's going to be an A++ setup. If we come back into the zone, we have the first leg up, come back for the retest or pause, and then that leg after that is, in theory, always the most powerful. The second primary up, the third leg in the move, first leg up, pause, pull back, and then primary, the strongest part of the primary. If the YouTube's delayed, maybe would you guys prefer if I just streamed? I mean, I guess you can just mute the YouTube. We're gonna try to go live like once or twice a week to start off, and then see how it fits in with my trading. And if I've noticed like in the past I've gone live a few times and I start talking like I just was, and I'm not watching anything. I'm just completely lose track of different flows coming in or what I'm supposed to be watching. Here it's not a big deal. This is not a really fast move. We just made another tail low, 65. They reset my TOS for some reason. I went like way above the data from like different scripts and stuff, and it just like reset all my settings. And I had a backup for most of my scripts, but I'm missing a ton still. Even just now it reset my settings. What the fuck happened with my computer earlier? Let me see if I can put them back on. I'll show you. Option volume. I don't know if Garrett's in here. He helped me get these set up again because I sent these scripts out a while ago. I don't know who actually threw them in. Pull up SPX if you can see. These are like extremely naive assumptions for SPX, but it's better. It's like this is what you're gonna see on spot gamma, like shit like that. Let me add extra strikes. Yeah, this is why I like TOS for a lot of things. With the wait, like the charts you just saw, I keep some stuff super simple, but you can get pretty creative with some of the scripts. Is everyone able to see this right now? Can someone just comment?
Yeah, we can.
All right, cool. So this is extremely naive assumptions. It's just calculating, based on volume for the most part. It's not to really understand what's going on. You have to match up every order, basket orders based off vol nodes, or if it's dealer activity or if it's retail, to get a surmised dealer book. But this is what spot gamma does. He takes the aggregate of every strike. He sees the impact of each strike based on just open interest and volume. It's naive assumptions, but if you're not looking at anything, I can send you guys these scripts for TOS. It's just kind of a heat map. It shows you where the volume is, how much naive assumptions of gamma are on that strike. Put this back over here. Yeah, if you're on TOS, you can just ask me, or I can post those scripts in the comment. I don't think those scripts are like I said, everything got reset, and I think they're a little off compared to the ones I had prior. Because gamma is supposed to show up a little different. Like a slow move like this, like we're making new lows. You want to be in if you're trading ES, something with like 1 delta, like underlying synthetics, something that's not gonna be right and wrong at the same time. When I trade options, when I take trades, I'm looking for convexity. Like I want to lose small and win big. Here everything's pretty fairly priced on same day. Like I think even puts are a little overpriced in some regards, especially on the same day frame. I wouldn't sell them yet because I think you're going to get a better spot if we get closer to 4450, 4455. But this is kind of looked like the setup when we came into this week. You want to straight trade underlying, or you want to take quick hits and be out, or focus on some single name vol and single name equities, because indexes aren't really giving you much opportunities unless your inputs overnight. They're not giving you much opportunities intraday for the long ball. Going forward, like I mentioned earlier, like we would love to see this sell-off kind of seem more dangerous into OPEX and the week following to set us up for the move into Q4. But that may not be the case. We may end up 45.50, and then from there we have to kind of see what happens post OPEX. I'm not expecting anything major on the downside, but that would be the window where things could evolve faster if there's some news, or there's always a higher chance of fragility being impactful post OPEX. Fragility is basically a state where there is no dealer intervention. There is no dealer coming in like they are today. Everyone's selling, but it's like a stair step down. This grindy action. If we're in fragility and we have the positioning like we saw today, and there's no support, it's more of a free fall. Every 20 minutes, 20 minutes, we're just continuing to chunk down. That was more prevalent last year. This year it's we've had SVP, we had the banking crisis kind of save the market, and we still got a ton of liquidity to go. They still have a lot of ammunition to go. I think people really, especially the Doombergs and the credit crisis those fucking guys, they fail to see how long this cycle is. This cycle is like 5 to 10 years, and most likely 10 years from when it starts. And we're in the part that could still be mania. We could still be in the bubble part. And the money to be made in bubbles is clenching your ass cheeks and going long. Like, it's not, you don't want to try to be smart. Thankfully, we have, these flows to fall back on, and I know it's been kind of a rocky period the last month or so, and that's going to happen. Like, it's never perfect. I don't expect it to be, and we're coming off. I was on fucking peak euphoria before August. I was like, this is, I got the best work ever. It can't miss. I'm going to be making money forever. And then you have August after that, and it brings you back down to earth. But yeah, it's never perfect. But overall, like over the course of this year, it's kept me long majority of the year. And if this cycle ends up being this stage of the cycle ends up being as long as I think it can be, meaning we don't have any recession in 2024 either, it's gonna be quite the wild ride to the upside. Things can change, and you always have to respect price action, what's going on in the market, but let it change before. I'm not trading 2025 leaps right now. That's not what I do. But I always kind of have an idea of what I think the bigger picture is what path that unfolds in, and it's not guesswork. We're looking at different cycles, and at minimum, I know that pretty unlikely that we have some major blow up until skew gets much lower for Q4. Skew on puts comes in heavily, and we haven't seen that yet. There's not really any major warning signals under the hood, and we could drop. We could have these 5 to 10% corrections even, and it's still normal. Like that's what happens within these moves, especially in this cycle. It's gonna, the deeper these pullbacks get, or the more volatile, the more dangerous, and the more positioning we get hedged on the downside in the wrong areas, is going to create the real fuel for the upside. And let's say we don't have a recession 2024. Worst case, it's like 2016. It's just like no volatility and the slowest move ever. I don't think that'll be the case, and we'll most likely, in the later stages of a bubble, if we're in 2024, the later stages, it would be a full-blown mania. Like I don't think people understand how early in the squeeze Nvidia is. It may look late if you're just like, look at these percentage gains and how far it's come. It's so early in this cycle, and even in a bear market, Nvidia can put up those numbers, it could be going up the entire bear market whenever that starts, or whenever that resumes, if we don't make new highs. Nvidia could go up the entire time. It's like a bubble within the bubble almost. AI is a completely separate thing. You could see $1,000 easily Nvidia over the next 12 months. I would even say I expect it. Like 750, 800 looks like a very viable target in the next few months into the end of the year. There's a lot of magnets up there that I don't know if we get pushed above them, but it's just going to take some good news consistently hitting these insane guidance numbers. It's going to keep going. Again, I'm ranting. That's kind of going off on a separate tangent. The oil thesis, we haven't really talked about that in a while. It's Oxy's up. It was up 10% yesterday from our entries. I wish I had bigger balls back in April and was adding really large size into like 55, 56. But that was like the only, besides last month, that was like the only other instance this year where we're getting involved in trades early and ended up being like early and wrong in the initial trades. But thankfully I got the common on. The common is my largest position. I'm still expecting more on the upside if I'm looking at it technically. If I'm looking at it from an options perspective, it's a little more susceptible than what the TA is indicating, just because of how, at least in the near term, it's gotten so lopsided with out of the money calls, low impact on shorter frames, like into the next 2-3 weeks. It's going to have to really make a big push. We're going to have some crude news again. And overall, if we don't end up in the next leg of the bear market or resuming the bear market, by 2024, early 2024, the oil thesis isn't going to play out until like 2025. This is a tradable rally. Like I take trades like that because even if the jackpot scenario, or that there's multiple paths that still point higher, even if it's not going to be that huge trade. So you take the right swings and you hit your first targets, you take profit, and then you see if it's the big one. I don't lean at the moment that this is going to be some massive trade. We'll see. I mean, energy is set up for the move. It matches the time frame on cycle work from the previous, inflationary cycles that we were analyzing. But it's never going to end up a perfect match. We were in it months early. It wasn't a trade I was in for like 1 month or 2 months. This was always a long-term swing. But I'll be if we don't get to like 70, 71 and do a complete turnaround off a cliff, I'm going to be taking some profit up there if and when we see it, and either hedging with some puts or exiting and looking to see how that move shapes up. Last time I did that with Oxy, it went up about $60 after, but this setup's definitely not as clear as that move was. And even that move I expected when it was back at like 36 when we were in our first trades from like 20. Even that move looked like it was going to pause, and you just had all the macro, the war with Ukraine, everything just fell into place and accelerated that setup. We don't really. I think we got the good news that we're going to get. We got production cuts. They're not going to come out tomorrow and say they're cutting more. That would be. I'm not an OPEC expert, but that's pretty unlikely in my opinion. Let's see what's going on here. Alright, so since I've started talking, things have gotten a bit more bearish. Alright. Let's see. Not in price, in flows. And the flows have gotten more bearish. We're coming into this 4.455, 4.450 zone a bit too early. And especially if we get it before noon, this could be a bit more sell than I was saying earlier. See, like when I said in an hour or two, I might be able to say it's close to impossible unless we have major changes. Now we're starting to see a lot of high impact negative bearish positioning around those strikes that could push us through that support that I was mentioning earlier. This is this next hour is going to be key. What could I trade here for? Let's see how this is going to shape up. If I sell 4.450s today and I buy 4.450 tomorrow, let's see how that looks. Right now I'm looking at possibly selling 4.450 call for today, and then buying 4.450 call for tomorrow. And if you pair that with a 4.440, 4.430 put, so that spread I just mentioned would start losing about a buck at 4435. So if I'm gonna lose at 4435, I could do a 4445, 443. Put spread on top. Is it really hard to understand what I'm saying here? Like, I'm just saying like numbers. All right, let me type it out. Looking at selling 4450 calls same day. Alright, I just typed it out. Let's see here. Let me see if everyone, bronze and gold members can get into the chat. We are live right now. So yeah, if I'm looking at this right now, next 45 minutes, things could become much more bearish if we come in to 4455, break it, start going below with some momentum. It's starting to look much less supportive in that zone. I do not expect it to hold. I think we're gonna at least get 5 points below, and that's where. Let me type this out. 4445 50 is final line. Well, actually, looks like this now. 4440. That's where I'm expecting this move to get to if we break. Expecting SPX to get to if we break 445 SPX here. Let's see. And if that zone breaks, that 4440, 37, if that breaks, we don't want to be looking at any longs. Not yet. We got to see what the fuck's going on, how this shapes up, and what's if this is morphing into something more decidedly bearish. All right, looking at the spread. Okay, I just opened 3 cons. Let me open 3 cons. Open trade. Trying to, because I know there's new people out of words. 445 call. Same day credit against 445 call. Tomorrow XP. Debit, net debit, 670. Three contracts. So short, same day 4450 call SPX, and long, tomorrow XP 4450 call SPX. Now I might pair this with a 4-4-4-5, 4-4-4-5, 4-4-3-5 put spread. What am I looking for with this trade? If I don't add the put spread, is basically a close at or below, like very close, like tight to the 4-4-50 strike. And if it keeps going up, you know, say 4-4-50 holds, keeps going up, you're not really, it's a very marginal, let's see what it came out to, analyze. Yeah, around like 4-4-6-5, 70, you might lose like $1. We're looking for a close right on 4-4-50. Or plus or minus 5 points. And if it doesn't close there and you get some larger move above or below, it's still not really hurting you. So if we come back up here on ES and tag that, on this chart, this is the 5-day 21 length EMA. If we're ever in a trend day, you want to have this up. Like days like yesterday, it's like doesn't do anything. But anytime we're in trend, it should never get back above that line. It might get above briefly, and you'd wait for like a candle close above, 1 or 2 candle closes above, and then you might have reversal of whatever that AM trend was, or whatever that trend was going on during the day. But generally speaking, in a trend move up or down, this is going to be where you enter if you're not, already involved. I like to see it on the 15 too. I usually don't have it up on the hourly or the 2-minute. I just have to redo some of my my studies profiles. I had the issues on TOS that I was mentioning. I usually put VWAP, and I got another chart right now with expected range. We're at 86% of the expected move today. $43 out of the 50. SOX L 22 put sweeps opening 0.61 debit. And they're starting to sell some calls. Yeah, I was posting those 67 calls on Oxy a quarter. Now the 66 calls are trading 17 cents. Now I might take a look at these Oxys on this short frame. Let's see what's been going on. And add this to your watch list. I'm going to post it. Alright, let's take a look at Oxy. hit 65, 30. Oxy's confirmed basically every low on the shorter frames. So if I'm gonna get an Oxy on some lotto sweeps, I want to see us take out. We're probably gonna like it. There's confirmed lows, but we're off that 65 strike. We're probably gonna see some sort of bounce. And then I'd look for a final tail on Oxy. Let me switch all these so you can see. These aren't my annotated charts, but these lows are, what's the low? 75, 55. Yeah, these lows are all confirmed. This is confirmed. Now this is where you can get yourself in trouble sometimes looking at these shorter frames. As far as intermediate frames, it starts at like the hour, 4 hour daily. So this hourly, it's just a run-of-the-mill pullback. You can see moves like this, especially around a major strike like 65 we're seeing on Oxy. Never get down to oversold and just reverse this off a major option strike, some different factor news, something like that. It just wouldn't be ideal entry. Let's see, 30 minute has it. These are all the shorter frames, at least what I would consider the shorter frames. So I'd want to see one more low before getting involved in Oxy. But after that low, and I do think it's going to have some sort of rally period here. After that low, if we get it today, ideally not too late in the day, and can get some cheap lottos on the close, that would actually be a really good lotto setup with how those highs look. The structure into that high, it looks like we're still in a bull phase, and this is a pullback within that bull phase. Confirmed highs on larger frames. Actually slight non-confirms, 75. Really slight non-confirms on the larger frame. As far as Oxy goes, I mentioned that this might end up just being like a trade up, not like the larger up. A really good trade up, 10% on any position that's larger court. It's a great trade up. But I don't want to see $60, $61 again and still be holding the bag. So if this move sustains a break of 65 on the 2 daily closes, I'd probably be trimming or hedging the position I have left on common. We're starting to get a bounce by Euro close. We'll mention 11:30, like that time frame a lot of the time. It is the Euro close, but it's also where the vol crush, the first part of the vol crush on intraday positioning kind of begins. You'll see like options, not too close to the money are still priced. You can get like things that are 20 points out of the money and they're still trading around a buck. It's actually not really expensive here. The vol crush really begins around that first rebalance around 10:30, and then the dealers kind of rebalance their book, start pinning volatility if we have these sorts of flows, and even if we're going down, volatility is decreasing while we go down, creating an unlikely scenario for any major blow-ups. Like we could still have this move where we hit those targets I mentioned, but it's not going to be like some multi-sigma sell-off. If you're going to get a multi-sigma sell-off, it really has to happen before lunchtime. If it doesn't happen by lunchtime, the dealers are going to have this thing pretty locked up. You got about till lunchtime for those crazy bearish scenarios to unfold, at least at this stage in the OPEC cycle. How many viewers do we got on YouTube? Am I blowing up yet? YouTube. If I turn it on mine, it makes some screeching echo. So let me mute this. Got 5 watching. How many viewers do we? Big time. Let's see. It's 11:30. Euro close. These call buyers might be in for some trouble. Actually, we got an hourly non-confirmed low. I think we got a 15 confirmed though. Oh, that's Oxy. I'll take a short if it gets into here. What's our good old Carvana play doing? Carvana spent too much time around this 50 strike. I still think Carvana could see a larger move, like the rationale that I explained when we first entered, and a larger move this week. There's still a lot of thin air if it can start sustaining weakness below 50, and looks like it's gonna have to get below 48 and sustain, and then you'd be in a straight shot to 45, and then below 45, there's kind of thin air until like high 30s. So what's happening? What's everybody doing? I know we got a pretty small amount of people in here today compared to what we usually got when we go live. You know, the transition's been hasn't been terrible. It's a lot cleaner than I expected. I knew it was going to be a little bit of adjusting to the new setup. Overall, I think it's going to be a lot easier for me to just hop on live instead of having to gather everybody on Discord and get everything set up. I've got everything in one place, and the channels are a bit more organized. I have more control over who permissions.
You like more this photo for the first one or this one?
Which photo do I like more?
This one or this one?
Do it again. The other one.
This one, right?
Yeah.
Okay.
No problem. A couple of times a day, I am the photo guy. I gotta judge which photos are looking better than others for my wife's Instagram. I don't know what the fuck I'm looking at, but I try my best. W, were you what was your Slack name? Who are you in Slack? I feel like your name's different. Oh, it's Warren. Hell yeah. What's happening, man? So you got back in the Roku? Was that you that said that earlier? $9.15. Or what'd you say? Oh yeah, you got back in the Roku. 95 plus for 3. I guess those must have went at least $4 or $5. The 100 calls were $2. Nice, man. I don't know if that puts a dent in the August debauchery, but I'm sure it helps. Yeah, I would not be hanging on to I mean, we could complete a pullback today at this rate. Yeah, that was one of the ones, the 100 calls, that was one of the ones I held. I would have paid, a penny out on something trading less than a dime, but I wasn't expecting that. Finally got news that broke our way after BA and all that bullshit. What's BA up to? Are they every time I look at it, it's got, new orders, good news. Are you talking about BA? Yeah, I didn't want to keep everything posted just because, Roku. Roku is, if we get back into that zone I mentioned, with the right looks and overall indexes, it's going to be a banger out of this first move. Like with that being the first move, this next leg figures to be just, if I'm just looking at technicals, the option positioning looks very supportive once we get over 100 to 120 on a pretty straight shot, and that lines up almost perfectly with the TA. Like I said earlier, I want to look for when TA and the flows sort of line up. It's going to be large move in a short period of time. Bob, I'm still hanging on to those 100 calls. I am not adding yet. I want to see Baba. Baba has another high to make minimum off the previous low. I want to see how that high looks and how we handle like the 98 to 100 area before I go really heavy into like leaps and longer term positions on Baba. I still really like China, but over the next couple of weeks, there's higher risk in China, in my opinion. There's still a chance of a final washout. The structure of the moves I'm seeing on China, the Hang Seng, isn't really bullish at all, to be honest. It looks like this is kind of counter trend. it looks like it could be counter trend. I should say it could resolve over the next couple of weeks and rocket over, the 100 strike, get over to like 110, and it'll look much more bullish. But at the moment, it's not a clean look by any means. Let's K-Web look. Yeah, look, K-Web and Bob always look the same. I've just been awarded $100 on Barstool Sportsbook. Well, I can't gamble in Florida. Who's trying to log into my account from the Northeast? 20 leg $100 parlay. See what everything's looking like. Yeah, like I was saying earlier, even if you get puts intraday, you wait the first hour, you check out, see how things are moving. You buy puts 70 through 73. It's a tough trade. You got to really trade that first move, and it's not a quick one. And you might make, depending on your strike, half a buck. If you're going at the money. Trend days are generally pretty hard to get involved in. If you're not in on the open, you usually get maybe one or two times where you get a retest of this trend line that matches up with, some of the strikes I'm mentioning flow-wise, but that's not even a given. The other week we had that trend up move that we were involved in, but I coming into today, I did think we were going to have a trend day, but it wasn't as clear as when I mentioned it the other week. There was it was lower score, but there was still enough that I wouldn't trade the open that we had a first hour reversal, especially with how the initial look at the 4-4-5-5 strike looked. It looked like we weren't gonna have any chance of breaking it coming into today at the open. Setups obviously changed. What you would want to see to get involved in puts is, we come back up to here slowly. All those strikes, 4-4-5-5, 4-4-50 get really cheap, too cheap, and are underpricing that final move end of day, and that would be a really nice tradable op if we saw that intraday. But you'd want to see this kind of grind sideways or up last for, ideally till like 2:30. Not saying that's a lean. I'm just saying that's, as far as a tradable setup, that would be the most tradable setup intraday. And then once we come out of this move, if we hold the right areas over the next 24, 48 hours, I'm going to be putting on some, not swings, but, 1 to 2 weeks out, call plays. Hopefully some of the reads I've mentioned play out, like we see Google come into that. Yeah, Google's already getting close, comes into that zone. If I'm looking at everything as it stands right now, with current positioning, which is going to change, it looks like tomorrow AM or Friday AM, lean is definitely tomorrow AM. We're going to get a really solid buy up for a 1 to 2 week duration trade. On the long side. And I mentioned I was out of those positions just because I didn't want people coming in the group, and we had a bunch of new members, and seeing all that stuff and saying, oh, it's like cheap, let me load up. It's just, they're not. I wouldn't enter them here. I'm in them like because they were less than a dime and they were shit positions, and we got some news that bailed us out. But those setups and those trades are still completely on my radar. I just have been waiting. We got the first leg up. I wanted to see the pullback or pause after Rivian, for example. Rivian looks great. That first leg up is bullish structure. We're seeing a pullback now. I think we might get into maybe 22 at max, 2150, 2175, and I'd lean closer to 22, but we'll see if this sell-off, picks up some momentum if and when we take that second shot down. But Rivian, I'm still looking to load up a swing and a shorter term position on. See what they've been trading. Yeah, retail has been selling calls and buying puts. We love to see that. That is the best setup for a squeeze into OPEX. We're going to go over this like in the flow video, but when retail is short call, long put, and dealers long call, short put, that is wind at your back and supportive flows to the, like, depending on where they're positioned. That's what you want to see to be long. Like the example last week with Tesla, everybody on these retail scanners was crowding into out of the money calls on Tesla. Dealer becomes short those calls. They act as magnets and then they reject. We got briefly above, then you reject. There was always spikes to it. There was like one or two spikes above it. And the only way that becomes, the flip side, like we start ramping up, would need to happen when the book is thin, pre-market or aftermarket, and they did with GameStop. Every time we saw those big moves, pre-market or aftermarket, they were hitting it when liquidity was thin, forcing these squeezes to happen when they should have been stopped at these strikes, and the dealer wasn't prepared, so then they had to come in and buy even more. That's the only way you kind of get you never bet on that happening, especially with like the setup like Tesla last week. GameStop, you could have bet on that happening because it was continuously happening. It wasn't like it did it one time. It did it for days and days and days. They are still hitting these overstock nonstop. Who's got the read on overstock that this is not going to be a fucking dumpster fire? It is a dumpster fire, but whoever's trading this, they're seeing something. What was the news? It was Bed Bath & Beyond. Yeah, Bed Bath & Beyond, bad revenue. I'm not a fundamental guy, but how much of their business is Bed Bath & Beyond that they should be down 25% today? I wonder if Overstock still has that T0 coin. Remember I had some shares of Overstock. I got some T0 and I got like an amazing profit on it when they gave that out. Yeah, it is. I mean, I'm saying that confidently. I don't know that much about it, but I know it's not nothing. I thought Mark Cohoods was the guy. There's one of them that just fucking. I used to trade Overstock like back when they had the crazy CEO Patrick Bryan, I think was his name. Crazy story with that. It was like, I was really bullish on Overstock during that period because there was a ton of positioning I was seeing, and I was hearing like something, there was like the rumor mill was swirling that this guy was gonna step down or stop being CEO. This guy was a fucking nutcase. I'm sure some of you guys were around then. Patrick Bryan or something. Bryan. He ended up having to step down because a Russian prostitute, like, here, let me see if I can find the story. Patrick Bryan. Yeah, Patrick Bryan scandal. Let's see. It's like a huge conspiracy with an affair with a Russian agent. I don't want to read this whole thing. It was literally like the Red Sparrow movie or whatever. Some like Russian spy infiltrated him and seduced him. And whoever was that rumor mill, Wall Street knew. I must be thinking of that Adler Legs guy or something. Mark Cohodes. No, one of those guys used to shit on. If you used to post the Overstock, when I first got on Twitter, if you posted Overstock, you just have just a gang of bots attacking you. Mark Cohodes. Oh, that is Adler. Whatever. Yeah. By the way, Larry, he's been saying that for like years. Since I was long Overstock like 2 or 3 years ago. That dude's loved the T0 platform and all that shit. I'm sure there's something there. I think this drop is, again, I'm not a fundamental guy, but 25% for Bed Bath & Beyond. I don't know. Did they put like stake their entire business on the success of Bed Bath & Beyond? I don't think that's the case. It's a shit company. Like Overstock's a dumpster fire. I don't see this move making too much sense. W is another dumpster fire that has a great setup. Wayfair. That spread we put on, it's small size, but ideally you just want to stay around 44.50 all day. And then you can close it out to end of day and just take your VIG, or you take a bullish stance, you can hold it and you get a discounted entry on those calls. I'd probably take it end of day. Look for the AM setup, first hour reversal. because it's not a definite tomorrow. It's tomorrow or Friday. The other way you play this is the 4,500 put credit for Friday. It's funny. I posted that trade earlier from dealer positioning. The dealer executed order. I never see dealers execute orders like that, and I haven't looked at these types of trades in quite some time either. It's been a while since I've seen it, at least. The one they did with the 929, it's really, I actually really like that trade. Because if you get 45.50 by Friday, you make a ton of money if you just take it there, or you got a free hedge and some profit banked into the quarterly XP. I posted in the chat earlier if you're wondering what I was talking about. Alert went off. Let me see what the 4,500 credit for Friday. On the put side, let me see what this looks like. Let's do 25 strikes. Let me see what it looked like if I did it for... So if I was doing it into Friday, the thing is, I don't know if I'd go 45.50. I think the higher confidence trade, for me at least, is selling the 4,500. And then buying 4,500 for OPEX. The net debit is still about the same. What does the 45.50 look? 45.50. And then you go long the 45.50. It's definitely similar profile, just a little less risk. Know some guys are just tuning in. Just posted this on my live stream or on public Twitter. So at the moment, as far as intraday goes, we, after the first hour, kind of look like a slow grind lower. If we're going to see one, around the, I guess, 11 o'clock mark, we got some negative impact flows around where we saw a wall around 45.50, which is right around here. That wall became a bit more bearish, and after this period, go sideways, hopefully get into the 70, concludes, I'll be looking for, at minimum, a test of 4445 SPX, 4450, and likely a break. Let me mark these up, because I got a bunch of other stuff I'm watching that have these levels depicted. Alright, let's do it. Right around. So there, and then it goes down to here. 3.7. This is SPX. Rest are ES. Right at the moment when we came into the day, 4450. Well, below Let me put this into just to catch everybody up. Again, I got these and like 20 other programs loaded right now, but just to show you on this chart what I'm talking about. Oh, that looks terrible. So yeah, this today was, we had to hold here if we were going to turn into a bullish setup. But since we broke down below here, we have negative flows down to about here. And initially, when we mentioned that, this looked like a wall, and this would have been green. I would have been saying, you know, this is where you want to take off your shorts or start looking at the long side. But as the days progressed, this zone has got more bearish, and now my target is 4440, 443735, 4440, 4437. This is my target right now. We're gonna see how the day progresses. If we get a back up into here or here, I'd definitely be more keen on maybe an intraday short. We were talking about the 4445, 4435 put spread. I already entered one trade, some credits earlier today. Yeah, I don't think this week we're done testing the 4500 strike. There's ways to take advantage of that given today's move, like selling 4500 put for Friday and long 4500 put, you know, further XP, and you just look to take it off on Friday. This person keeps calling me. I'm trading, working. Sorry, 1 second. So yeah, I mean, ideally, I know you guys just heard me say this, but whoever just tuned in from Twitter, we get a pop to this zone, this area, and kind of chop around until 2 p.m. I'm not saying that's going to happen. That would just be the best setup from a trading perspective. And then you enter some puts around that time for this tail end of the move. But yeah, at the moment, it's kind of hard to, unless you're trading and scalping this super tight range, there's nothing to do here besides, you know, selling credits, condors, something like that on the edges. You just gotta sit tight if you want to trade ES or look for some equity vol. Let's see what's been going on with some single names. We got Overstock off a cliff into such lopsided flows all day. Yeah, I don't follow that dude too closely. I know he's been bullish on Overstock since when Patrick Ryan was CEO. Like prior to that. How do I get this link? Send it to my wife. ENVX isn't that the name you've been all over, Lewis? Oh no, Lewis isn't even in here. Everyone's been talking about MSOS. What's it? A cannabis company. MSOS flow today's. I mean, it's gonna be lopsided, but once you get over the 9 strike, you need to get over the 9 strike on the weekly for anything to happen. If you want to be long for a crazy squeeze, I'd be going into like 2024. December, like 7 calls. 2024, 20, 25 call spreads, something like that. I don't know too much about the name, the space. But if you wanted to see this squeeze continue, it's going to have to pick up. But that 9 strike, 4 end a week, or this thing's going to get all this premium. Expensive IV is going to come in. Barring news, obviously. Why did none of these... my computer was fucking up earlier. This read was from earlier too. Just posted the J&J read. When we did that RBOP, I took the trade and actually just took in one account. I took a larger position on J&J. That's why I've been posting. It's not like a retirement account, but that's why I've been posting J&J here and there. Did any of you guys catch? I know some of you caught the RBOP. Did any of you guys catch the RBOP? Aside from, I think Warren did. What'd you end up making on that? Probably the same as me. Yeah, it's just about what I made. It's nice, right? Free money. I did it in like 6 accounts. But one account I didn't do odd lot. Yeah, but if you take it without, all that other bullshit, it's free money. It's pretty sick. Not yet. It was nothing. It was commissions that week. Didn't suck, especially with a couple accounts. Thoughts on NVAX? No thoughts, but let me look. I think this is actually the name that Lewis was talking about. Is that fucking Lewis right there, golf guy? It's gotta be Lewis. Let's see, I think I got an old chart I had for this. Yeah, it's testing. Yeah, Garrett, there's someone in YouTube that just asked about it. Has to be Lewis. In any case, it's at the we posted, what was this, 8:23. Here, I'll just post it in the chat. Read from 8:23. Can't post, it's too long. I haven't updated. I have to update it. But at the moment, it's right on the zone. Like I wouldn't be going long. This is like the absolute worst spot if I was looking to get long. I think it's gonna get. If I'm looking at it right now, it has to get through here and sustain. And if it does that, then you could have a really, really serious long up here. Let's see what flow is looking like. Option flow looks, it's barely trading on option market, but it is, tilted bullish. I got to see how much notional is trading on the open market because it's light flow, but there's flow there. 7.5 calls for 2024. So yeah, Golf Guy needs to sustain over 1030, and then for at least minimum, I'd say one daily close. I usually look for 2 daily closes. Oh man, I'm not just gonna keep rapid firing symbols. My bad. This ain't it. You're welcome though. We got ES coming into the lows. That calendar spreads almost up $1. I'm not trading it here. I'm looking for the closing move. Yeah, I mean WW. I haven't looked at it. NVAX only came up because someone from our group chat has been all over the COVID round 2 theme and is mentioning it, and there's been supporting flow. I haven't seen WW. What's it? Let me look. WW actually is getting some volume today, flow wise. 2x average volume. Yeah, it's weird amount of volume. All opening volume on these orders. Was there news or something? Why is everyone hitting it today? September. So they're looking at the 922.12 calls, 922.12 calls. The Leaps 12.5 call. Some of the people that were trading the 12 calls shorted the October 15 calls against. That's a pretty solid spread. 15 cents debit, $3 upside. Sustained move over 11. That WW doesn't look half bad. Actually gonna keep that on my radar. See if the flow picks up on that. The flow's definitely picked up here. It's not like 9 times usual though. It's at like 2.2. IV's not crazy expensive yet either. But you need to get over 11. Oh look, 11's the high of the day. Yeah, on the option market you need to get, as far as the positioning is concerned, at least for this week and next week, you need to get over 11. If anything, you'd go short the 11 strike for like 60 cents and long post OPEX. This is watching paint dry with ES today, which is actually the exact move we want to see for the calendar, but would love to hit that spread. If we get a pop or sustain this utterly paint drying setup until 2:30 p.m. So for names like W and WW, you can use a tool like this. I can't really show this for too long because I'm not a vendor for data. But there's a lot of, this is the Trade Alert institutional feed, and you write your own scripts for it on what you want to see. But there's a lot of really cool ways you can, look at things on it. It's not, again, it's not modeling. It's not like super sophisticated models, but if you're trying to like just get positive EV or something like that, you could just base it off rudimentary things like skew percentiles of skew percentiles, of volatility, and be able to create like a full-blown trading strategy with just the context of option volatility. This is WW. What are we on? It's basic. You can go in more. You can see charts on this kind of stuff too. But it's super helpful. Everyone that's on MSOS, I think CGC is another. Was that Canopy? Yeah, Canopy. They're coming after the pot stocks. Let's see. I'll show you some of the OSTK flow I was talking about today. 4 times usual volume. They're just buying into this move the whole time. Yeah, all the high Vega trades. This isn't even showing the ones that I was seeing on my model. There's like, these are the ones I was seeing. They're going after like the fucking 10 calls. Looks like they got out of those. I haven't been hawking overstock. I don't think I'm going to be doing anything with overstock anytime soon. But yeah, this is a great tool. It's not it's better than the cheddar flows, the flow algos of the world. It actually can give you meaningful context, especially since you can script it. You can do like, if this order is above this Vega or this price, and this happens, and it's this premium, and it's this date, then I want to see it. And you can kind of customize all the features. It has all the data from Oprah, and you can organize it however you like. So instead of just getting like a ton of darts from just premium over this amount or unusual volume, you can really dial into what you want to see, and like focus on certain baskets, focus on certain names, and I'd say it's the best option scanner available. Jay Louise, are you still in here? Are you in here? I don't think he is. See what's going on. Let's see what the flow algo is looking like today. I don't think my thing's been updating. Yeah, I literally just used flow algo to see what retailer are looking at, what orders are repeat sweeps. These are all retail orders. Like everything on flow algo, cheddar flow is, they deem it smart money, but there's a ton of idiots with a lot of money. And those idiots with a lot of money are the ones that are going to put in the largest walls or dealers short that strike positions, because it's more money involved, and if it's piggybacked by all these weak and small hands, it's going to create Tesla scenarios like we saw last week, especially if it's all out of the money. Like you don't have to have sophisticated models. You can use if you're going to look at something as subjective as TA, you can use something as subjective as all these orders seem to be out of the money in one direction, and we're not over that strike, and we've rejected that strike. That's going to usually indicate the dealer is short that strike. Index and ORATS. I've seen people use this for back testing. I think let me pull it up. I actually have never even been on their website. It depends. Like I don't know. Let me see what you can do with it. I feel like this is a website I used to use. If this is the same one for like testing option trades. So it's got backtester, option scanner, trade builder. I'm just trying to see what you can do with this. It says option scanner, but it's just showing you bearish by 5%. How does it quantify bearish by 5%? Is it just going 5% down the chain? I'd have to check this out like more in depth to tell you if this is a good scanner, but my only thing would be you're putting in metrics that like super specific on what you want to see, which is more like a confirmation bias. So like it's great if like you have a strategy that's telling you one thing and you want to see what's out there, but you shouldn't care what you think's going to happen. You should care what thesis is, and the summation of all those theses is kind of what path that's leading down, not what you think it's going to be bearish by 5%, unless you're trying to use this as like a tool for I don't know how in depth this scanner goes, so it's kind of hard for me to. I'm sure it has more broad features than just pinpointing certain specific things. But I feel like I've known about this website for a pretty long time for their backtesting. And option backtesting is so fucking hard. You kind of have to do it real time. Yeah, I mean, if you want to DM me and show me like how it's set up, I can definitely tell you. I mean, it looks better than Cheddar Flow and the bullshit ones, but you'd want to have a live overfeed. I'm sure it has live overfeed, and be able to customize it to be on the same level as the other one I'm mentioning. and not only customize it, but like once it starts outputting, customize it so you're seeing like XYZ is doing this, and then I can go in really easily and see, all right, now that I've noticed this is going on, I can go in, type in my basket, type in my symbols, and see what's going on the entire surface for that name today. And I'm sure that one has like rankings, percentiles, things like that, but you want to be able to like easily go in and see all the flow for that name and all the flow for the past week, the past OPEX, the past quarter, to get an idea, not just the flow, what's open as well. That's the best you're going to get without modeling it. And you can model this stuff without live data. You can go in and get end of day data for free. Modeling is as complex and advanced as you make it. Like you can model things and overall you're just trying to interpret a large set of data. You can do that in Excel in most cases. But even if you're doing TA, like you want to be interpreting that momentum of these names, something that you can quantify, so you're not left with this strategy that involves your feelings and your gut feel. And some guys are really good at trading off VWAP and they can make a career off it, but those guys have been doing it for 20 years, and I'm just sure they have seen their edge become less and become less and become less as the years go on, because open market trading is not controlling the ebbs and flows now. It's all options. If you want that not to be the case, you got to play smaller games. You got to go to small caps with less institutional hands, names that don't have options or just have monthly expirations. If you want to play the big games, you got to really be looking at this stuff. But if you still want to play those smaller games, you have to play the smaller games that have less big hands involved. Small caps that don't have options, and stocks that are trading, those names are trading more off price action in these traditional theories than anything that you're most likely looking at on day to day. Day to day, if you're looking at mega caps, if you're looking at mid caps, most small caps, I should have said micro caps, they're being controlled if they have a very liquid option chain and a good amount of position. They're being controlled by the option market. Maybe not entirely. There's always other things going on, but there's no other instance where you can say 30% on average of all trading is being done by a dealer, and that dealer is reacting to the option trades, and those option trades account for another chunk of that trading in themselves. So it's almost we know for a fact that options on these names, on the liquid names, are the underlying, and that phenomenon is only going to get more pronounced with the widespread adoption, and if you got a good idea, you trade options. You don't want to make $5 on Apple going up. You want to make 500% on your option trade. There's some questions in here. Do you think we see a bounce at 44.50? Mohammed, so coming into the day, we were calling for 44.50 to under 44.80 SPX. We were under this zone. We were expecting 44.55, 44.50. That's moved down to 44.50, 44.45 initially. It still looks, we haven't come into it too fast. It still looks like it's going to be strong support, but compared to this morning, there's a higher likelihood that we can break through it and test down here, which is where I'd say the wall is right now. I wouldn't be looking to go long. Yeah, see, we just picked up some sell side. I don't know if that was quite the wick. Maybe there was some news there. We're making new lows. That calendar trades up $1 now. Yeah, Muhammad, I'm banking on us hitting 44.50. And I'm also banking on us not bouncing too hard. I'm in a 44.50 swap. I'm short 44.50 same days and long 44.50 calls tomorrow. What EMA is that green line? It's the 21 length EMA. Mika, if the dealer is short a strike, they're actively working against, like they're short that strike. They don't want to see price action above, and they're going to actively work to keep price action below as they hedge. Unless there's a shock during when the book is thin or liquidity isn't abundant, you run above it and you force them to hedge to the upside, and that's how you get squeezes on news and things like that. Like Roku this morning, but they got Roku back in the balance. Wow, Roku that was the alert that went off earlier. I was wondering, I couldn't find it. Roku's already down below 87.50. Roku, we're looking for that 87.50 to 85.25. Unusual Whales, I think it's just a cheaper version of that bullshit retail platforms, but I haven't looked at it. I don't really know what they even offer, but I think it's more or less the same as those other ones. Yeah, I'm absolutely telling you that if you haven't figured that out by now, you've probably had a ton of days where you're like, the market is being manipulated. What's going on? It's not really being manipulated. It's a byproduct of option positioning. Mika, it is no coincidence that the COVID crash started on an OPEX and ended 1 month later on an OPEX. Major cycles and downtrends end when positioning rolls over, when we start the next window, next cycle, 4-week cycle. It's no coincidence that the most recent low came on August OPEX. These are not just a ton of coincidences. They are all a byproduct of option positioning. Yeah, I mean, there's Goldman's still putting out notes that make no sense in terms of dealer positioning. They're still using naive assumptions of gamma to try to make inferences that are very broad brush strokes when it's much more fine and a much more dynamic, evolving situation that you could never put a broad blanket statement on unless it's some sort of event. Most of the time I saw someone responded to my post, I think it was mid-August, with a some Goldman analyst saying we are in negative gamma and this is what's going to happen on a 1% move, and it was just false. Like, that's not what's going to happen. Negative gamma is one variable. Vanna and charm are in my opinion, the driving force in the day-to-day markets, and you have to really factor in time in the equation in terms of Vanna and charm, and everyone who's all the Jexers and the Gamma boys, these are super naive assumptions looking at saying that one strike breaks and things are going to happen like XYZ under it. It doesn't happen like that. And short gamma is the opposite of what people think. It's pinning the market in short gamma a lot of the time. It's short straddle a lot of the time, and they're delta hedging back to their calls on a short straddle all day. Like we still, what are we at? Let me see. We're not even at 100% of the expected move yet today. We're almost there. We're 5% off, 3 points off. Mika, March 2020, notional on the option market surpassed open market trading, and since then it has only grown, and it will continue to grow as these platforms offer these products in an easily accessible format. And if you have a good idea, you don't buy common anymore. You buy leverage. Everybody loves leverage. We're all leverage junkies to the highest power that rings true on Wall Street. But I'd say I was looking at this stuff and trying to look at same day imbalances and modeling same day option positioning back in like 2018, 2019. And, we can make some inferences, but it wasn't anything that was a sustainable edge. And at that time, we weren't looking at the entire open surface. We were only trying to find same day imbalances during when these rebalances occur. And ironically enough, like that, looking at just the same day a lot of the time now is since this market this year has been driven by same day moves. Those same day positions and positioning is now a lot more pertinent, and that's kind of where we started. But as we built out from same day to weekly, then OPEX quarterly, like the whole surface, you start to get a really good idea of what times and what strikes, what spots and what times you want to be careful, where you want to be aggressive, and where you can, there's tons of ways to trade or model. You could trade based on what's not going to happen, and probably sleep a lot easier at night, going in every OPEX last year and selling 3,500 puts. But it's not where in my eyes, the true ability to capture the edges. Like I want to, my best trades are always going to be when I'm right across time. Like in this, if I were to do like a straddle swap and sell 4,500s this week, and next week we get some huge move, those trades, because it's very you're not taking a huge risk. You're long the back, and you can spread those and box it. And if you're right across time and across strikes, you can turn like $2 to $4 trades where that was the risk into like $300-400. Some FOMC events when you go up and down and do huge moves up and huge moves back the other way. I just got on a rant. Let me see what you guys. I had a hunch this was happening. Mika, options were invented as a tool to hedge, and I mean, obviously they're not. They've evolved. We've added so many products. It's no longer just a tool to hedge. It's a tool to speculate. You can express any single thesis you can think of across time and price and up or down, sideways, diagonal. You can express on the option market. And prior to options, if Joe Schmo held Apple stock, you have no idea, unless you're watching the tape and reading the tape, when there's a big seller. And you have no idea when they're going to stop, when someone's going to come in, when someone's going to buy. It's all real time, and that's where tape reading was a thing, and people used to read the tape, and there's still people that read the tape, but there's not a lot of edge in that anymore when you have options and you have no idea if you're doing order flow what's going on in the options. I can tell you now with options, since we know when things are going to expire, how much is open, and if you're looking at the options real time and basketing like between buys, sells, and who, if the dealer's long or short, you can make inferences. Since the Dodd-Frank Act, they have to hedge a certain amount of their deltas no matter what every day. They have mandates. So we know for a fact certain things have to occur in prices and times. Knowing when someone as large as a market maker or dealer is forced to do something, that's repeatable edge, and that's what we focus on. Options give you leverage by nature. Like these derivatives give you leverage, but they don't have to be used in the ways that most people are accustomed to seeing them used. They can be used to play house on every trade. If you learn how to trade options, doesn't have to be like the most advanced strategy ever. You don't have to work on an exotic derivatives test to position yourself in a trade where there's 3 ways to win and there's 1 way to lose. Especially if you're like growing a smaller account. Like I would try to like not use as much straight delta contracts. If I was growing a smaller account, I'd focus again on positive EV and trades where all these multiple paths lead to profit might be marginal, but the risk is it's harder to lose. Yeah, I don't know who your circle is, but if they've been saying anything else, I know tons of older financial people that everyone knows this is the game now. Like it's not like a speculation. Like it's not like an opinion. Everyone knows this is the game now. And if they don't, they're just wondering why their shit's not working. I mean, to be fair, you don't need to understand this stuff for some strategies. It evolved from hedging to gambling and speculation. Options were not used for gambling and speculation when they were created. They were used as a tool to hedge tail risk, hedge outlier scenarios, and they've evolved into gambling and speculation. But at the end of the day, like I think in terms of what you're talking about, there's someone warehousing the risk when these trades are being executed. And since people are gambling and speculating and there's massive amounts of notional being traded, you have leverage. It's 10x. And the notional being traded, with all the volume going up from all these gambling and speculation trades, and on top of the institutional trades and everyone taking their ideas, has created it's made the dealer complex and the dealer flows so much stronger than ever before when options weren't the largest game in town. So now when these large orders and these rebalances from certain expirations happen, it's not eaten up by what's traded on the open market. It is controlling price. It is the driving force. Testing below 4,450. Calendar is trading $8 here. I never put that fucking spread on. That's what whenever I go on live, I forget to do things because I'm just talking. It's trading over 3 now. Still confirming lows. Starting to see. That's confirmed. It's non-confirmed with 15, but confirmed over here. Oh, this is SPX. Mika, I guess you might just be joining us from YouTube Live. If you're not familiar with my work, we are modeling the option surface in terms of dealer positioning, and you need to also model volatility to have a good grasp on the interactions beyond just knowing that there's a certain impact. You have to understand how volatility is changing. But looking at stuff with the naked eye, like premium, I've never done that. You're looking for pattern recognition in the price of something that is derived from a lot more variables than, just the spot price of supply and demand. You have to factor in volatility and time, and I think it'd be a lot harder to look at for a pattern in that. If I was just starting out, I would read Sheldon Natenberg's work. If you're just getting into options, you want to learn what goes into their pricing, like how options are priced. You want to know how options are priced if you're going to trade options. That is the first step. I use charts like this just for my big picture reads. I actually use a different platform for my reads, and then just intraday. Like there's certain theories. My strategy involves at its core, it's option positioning, and volatility. But I do like to incorporate certain TA theories and price structures into that I've found help. It just helps give me confidence in a thesis. Everything at the end of the day that you're looking at, all these tools, if you're looking at the information I post, it's a confidence builder. It's something that gives you confidence to take a trade and stay in the trade, because you can take a trade for all the right reasons, but you don't have enough confidence to stay in it, and you don't make the money you should have made. You gotta get into there's a lot of orders, man. Yeah, I'd say it's easy to look at theory of pricing, and I don't know how you're studying right now. Like, there's a certain route I would definitely go if I was doing it again. I'd start with the Black-Scholes formula, understanding how the Black-Scholes formula is priced. Start doing that myself, and then there's all the information you see out there, for the most part, is like really, they don't apply theory in a lot of cases, and they don't talk about the book I recommend it does, but you don't look at things like skew and the difference and the how you kind of start to find mispricings. I've looked at. I'm just gonna try at some point to give a. Yeah. Okay. Good. That's actually, you're on the right track then. Most people are just looking at gamma and, you know, the basics and think they understand, you know, what they're ready to trade options. It's so much more than that. How price moves, and not all dollars are created equal. Not all times are created equal. Where there's kinks, starting to find, like, there's really easy ways to see sometimes when volatility is expensive and options are expensive. They're not, you know, you're not going to make billions of dollars, but you can look at kinks in the term structure and things like that, just like with the naked eye. If you want to get into dealer positioning, I'd study the GARC model, GARCCH. It's a good place to start. The thing with options too, that you really have to, if you want to learn how everything, like, I'm the type of person, like, if I saw, when I got into trading markets, like, I had a strategy that was based on secondary offerings, and I got so bored, like, just like, it was a great strategy, made a ton of money, but I wanted to know how everything worked. And, you know, I had people trading next to me at a prop shop, and they were like, it's just, the market's irrational, like, you just have to accept it, you're never gonna know, like, no one knows. And I'm like, well, you know, somebody fucking knows, somebody knows what's doing it, and they're making they're causing the ripples in these moves. And that's when I started my journey to getting arthritis, sitting at my desk all day and fucking studying this shit. It's a really deep rabbit hole, and, like, I'm still not even close to where I want to be with it. It's but to learn how everything kind of interacts with each other, you have to understand, like, when everyone's doing where and how they're buying things matters, because it might not, what you're seeing on the open market or the tape or whatever scanner you're looking at might be actually having the inverse effect if the dealer is on the other end of that trade, because they've bought the strikes out of the money or low impact, and it's created the inverse effect. There's a certain dealers hedge or support single name equities in the market only if positioning looks a certain way. If positioning, you know, when everyone comes in and buys out of the money puts and we don't go down, those out of the money puts turn to fuel. When everybody comes in and buys out of the money calls and we don't go up, or we go up and we reject, dealers, you know, rejecting, that's going to add sell pressure. We're at 4445. This was this zone. Again, this is I fucking missed this spread. I hope someone caught that spread. Missed the trade. The book where I would start, you should read everything by Sheldon Natenberg, and then what's it called? I got a bunch of ebooks on my computer too. It's like they're a bit more advanced, but I got a whole library like white papers and some PDF books I use too, but they're not definitely not intro. Well, Mika, that exact thing you're describing, if I ever see that, I want to sell into it. I don't want to be a buyer of, all right, at the root of trading, I want to buy cheap, sell expensive. If you're going to be long convexity, I want to buy cheap, sell expensive. If things get expensive and it's like in the 90th percentile of the NBVO, and if it's clearly expensive, I want to sell it. And then I can change my trade, I can change my strike, but I want to be a seller when things spike, whether it's warranted or unwarranted. If it's unwarranted, I want to get out. Like if it's just like a ton of buyers coming in and forcing price up with no real material change in the underlying, there's times it's just purely from just buyers and sweeps. You want to get out. You want to take advantage of that. You don't want to be holding expensive. You want to always be buying cheap, especially for long convexity. It's I forget what book I read. It was like it's like a poker book. You always want to be able. It was a poker book that was like recommended by one of the guys like that used to run Susquehanna. It was a long time ago, but in trading and option trading especially, you always want to be able to spot who is the sucker and like who's playing house in this trade. There'll be so many times that I've held a trade that is like a really far out of the money position, and the last hour or so it may go against me, but the contract gets destroyed. Like it goes down, but it just doesn't make any sense. It's down like 40 cents on the close. It's like annihilated, and everyone's getting out. Everyone's piling out, and everybody getting out of that trade thinking that direction is going to continue. They're generally the suckers. It's got that contract is cheap now. Like I'll add into those moves if I'm ever involved in one or looking at it. And then on the flip side, like things spike, things get expensive, and then you sit there, you saw a number on your screen of how much you were up earlier, and you'll wait till it gets back there, and it never does, because that expensive when it spiked into that contract being expensive, it was that was the peak. It is done like methodically. It's not just something they do sometimes, and they're not even trying to. Like it is methodically. They're trying to like fuck with your psychology on these trades and do everything in their power to get you. They want to get you out of the trade. They want people on the wrong side of the trade because that's how they profit. They are the dealers. They profit off you buying expensive volatility, them buying cheap, and you being on the completely wrong side of the trade on the retail end. It makes their job a lot easier. Their job gets hard when they're on the wrong side of the trade because the move happens so fast, like GME, and they have to continuously, and like those big moves that we saw with GameStop, they always got to happen when the book is thin. That's when you can fuck the dealer. When the book is very thin, pre-market and post-market. Some moves, pre-market, post-market, can really get exaggerated. By the way, I mentioned we've never come back to test this for entry. This is the same type of trend day we saw last week. And thankfully, last week we got involved, but this is the same type of trend day where it's really tough to get an entry unless you want to take risk. Well, it's tough to get an entry on straight delta. We're in the calendar. Drizzy, I think the first one that I started with was option volatility and pricing. I'm sure you can look online and see like beginner, which one's the beginner, and I'm pretty sure that other books are called advanced. You can open and close equity positions, equity options like on indexes. Well, yeah, that has something to do with it, but it's easier to run for dealers to not have enough time to come in when there's less liquidity. Like they're backing things up, or they're creating like these buffers, and it's easier to like run right fucking through them if it's pre or post market. There's less dealers active too. But then you have a scenario like GME, and they learn, they change, they adapt to whatever error in their ways created that situation. That one, I don't know how that would work a second time, but it would still probably work to a degree. You had a constant buyer. Retail came in every day, price agnostic, and bought. Hold on. So we're coming down, almost at this zone mentioned earlier. Earlier today, we said that below here, this is going to get tested, and this is going to be a wall. As the day progressed, we said this is no longer a wall. This is now become more bearish. These strikes by 4445, 4450. Now we have negative pressures down to here, 4440, 4435. I don't expect anything down here to hold. I think we could get it. I just don't think we could sustain it. And I think somewhere in here we might put our first bounce in and then tail into here end of day today or tomorrow morning. Drizzy, you guys can DM me on Twitter too. I think I have some. I have like all the books on my old computer. I like scrapped some of the parts out of it, but I do have some of the other ones saved on my phone and this computer. They're definitely not. I know the ones I have on my phone are like probably a bit advanced if you're in the beginner stages. It's math though. At the end of the day, you could go on Upwork, hire some professor to teach you the Black-Scholes model and walk you step by step through it too. I'm sure anyone who could teach you that has a pretty good understanding of how some of these Greeks work. Hey, I know we only got 11 people on here, which is crazy. I thought we'd have a lot more. Drizzy and Mika, where'd you guys are probably from my Twitter. You guys aren't just randomly from YouTube, right? Dry C. I'm probably butchering your name. Let's see, 1 second. No problem, Kat. Take it easy. As just a good for me to get into the swing of things with going live. From Twitter, yeah, I figured. You're doomed to get shake and baked. I mean, just understand, like, I think instead of just chalking it up as like this manipulation, understand why these things occur, and you don't have to understand everything. Figure out, your setup, your niche in all this that you see and over a period of time, whether you back test it or track it yourself, that setup works and has edge. I mean, there's always going to be things that are out of your control, even if you're looking at this stuff. But I know over a long period of time, the law of averages, the work I look at the moment, it can always change, is on the right side of the moves more times than it's not, and gives me the context I need to confidently trade my strategies. But I don't think you're doomed. I think you're just more it's more likely you won't understand what's going on at times. And there's ways to look at it and figure out the same assumptions later. It's just I don't like I want to take advantage of cheap mispricings, or be able to get into what I deem to be a mispricing, and that's not going to happen later. That's going to happen before a lot of the time. Mika, I am planning on doing at some point. I don't know how I'm going to do it. I think doing a course it's hard because I can't teach you my strategy. I can't teach you to see the market how I see it, but I could teach you how to quantify some things that aren't going to take you years to understand. And that's where I think I could teach some basic modeling techniques and some basic strategies that might not make you a ton of money, but will help you view the market differently. Well, I'd go further and say I don't think anyone trading TA has edge. Like, I think they may have edge and may have good pattern recognition, but the edge is so subjective. It's not. I wouldn't be able to call it edge. Like, it's so subjective. It's so in the eyes of the beholder. Like, unless you're doing something that is like repeated at these times and places based on momentum or above or below this EMA or something like that, TA patterns and candlesticks and shit like that is I don't know where this ICT shit came from. It's like all the fucking wannabe traders, that's all they do. It's so subjective. Like, and I've seen backtest on all that a lot of that work. It is no better than flipping a coin at best. Like, it's a lot lower most of the time. So I don't want to be flipping a coin when I'm trading. I'd like to like you're gambling. We're all gambling. It's just how you want to choose to gamble as the casino or sitting at their tables. Like, if you're going into trading and like thinking you can join my group or follow some dude on Twitter and you can make money, I mean, I think this is probably one of the best places for you to be. But over the long run, like, it's impossible to follow someone and not understand their edge to its core, like what their strategy is, and make the same money they make. Bro, I don't know where this ICT stuff came from. I never even heard of it a couple years ago. Dude calls himself a fucking ghost in the machine. Are you joking? Yo, dude's a failed trader. I'm pretty sure I saw a thing. He said, I didn't make money trading, and like, now I'm here to share the secrets to the market. My guy, you don't even know how to make money from the market. I don't fucking understand it. It's like, if a wick is here or some shit. Like, I looked at it the other day. Someone that commented something like, you don't even know where this. You call yourself a pro and you don't even know where this is. I'm like, dude, no one fucking making money knows where that is or cares what that is. It was like, I don't know, one of the abbreviations for those things. Look, if it works for you, all power to you. But I guarantee you, all those guys aren't worried about what color Lambo they're gonna get. They're still figuring out how this ICT bullshit works, and there's 20, 30 educators saying you just need to practice more or some shit. If you join a trader's room that's doing ICT, it's hard for that trader to see what he sees. He doesn't know what he's fucking doing. And that's a professional LARPer if they're trading ICT strategy and selling you a course. That's a great marketer and a terrible trader. Because if it worked and there was edge and it was so easy to explain because it's such an obvious edge, he'd be able to tell you and you'd be able to see it and you'd all be able to trade it. Like, the reason I could even like, if I was trading secondary still, there's 0% chance I would ever get in a group, tell other people what I'm trading, and have them impact my exits and entries. The edge on dealer positioning on the largest game in town, no matter what we do as a group, even if we get 1,000 people, it's not going to change. It's not going to make a ripple in the flows. That was always my dream, to have enough money to have a fund and do whatever. That was in the past. I don't really want to have a fund anymore. To be a large enough player that I was able to impact the surface. But I'd rather just be second. This is the first time we tagged here all day. I'm just trading that calendar today. Anyone, I don't know, I know we don't have everyone from the group in here. Anyone take the calendar with me? I'm typing in the group real quick. First potential, short up by 58. So, this, like I said, this line pretty much holds the trend for the day if we're in a trend down. As far as positioning goes, we could get back up to 4455. I wouldn't want to be short above 4455 because that would mean that we're probably heading to 4470. We get above 4455 and sustained by 230. Let me see here. There's a chance that was a low. There's definitely a chance that was a low. I'd like to see one more low. If it's only for a marginal into 4445 ES and 4440 SPX, that would really look picture perfect. Maybe on this bounce, I might check out that spread again. And I might do it a little tighter than the 3.5. The 3.5 gives you a little more room. Timing is everything when you're trading options. I try to, like, my larger trades and setups are always going to occur in certain windows of time, especially reversal setups. How much do I go off it? It depends. It depends on how the stage is set and, you know, what trades I'm in, how fast time is moving in those trades. I like to look at it more like that's a factor in whether something's cheap or expensive on an option. It's not like it's the biggest factor in my opinion, and, like, you know, if you're getting a good deal or a bad deal, especially in shorter frames. So that's like more important. It's like what conclusions you want to make from time, or what things need to happen in a certain time for, like, conditionals. Like, this needs to happen by this time for this path to occur. Like, that's for me the importance of time. Like today, like by 10:30, if we were below 4480, I'm bearish. If we're above 4480 and we hit here and we bounce, I'm playing the first hour reversal and I'm looking for upside. And then as the day progresses, after 10:30, I'm like, all right, we got room down to 4,450, 4,455. And then I said on the beginning of the live stream, like, I could probably come in 2 hours from now, and I'm going to tell you it's almost impossible that we break this zone. An hour goes by, and the things that needed to happen in that hour to make this area less supportive and more bearish occurred. So then I now know that the things occurred in this time frame that needed to happen for me not to expect this to hold. Now I'm like, all right, this is probably going to break to some degree, and we got to lower this and adjust our expectations. Yeah, I mean, you're going to be in a load of trouble if that's your strategy, man. That's a dangerous game. If that's your game, if that's like some fun trade you take, it's one thing. But if that's your whole game, it's hard. Yeah, I'm still thinking of doing I still want to do a challenge account, 100%. I just gotta, I just gotta do it. A lot of this stuff that I've been wanting to do, like move to Discord, start going on live, I just gotta start doing it. Thank you for reminding me. Should we do like some insane small value? Or what do you guys want to do for the challenge account? Mika, just so you understand, just as easily, you're going to get screwed on those trades. Unless you're making sure you're buying something cheap. So something that just went 100%. I mean, we're down 3 points from where you probably said that. And then you watch it for 1 second too long, you're fucked. Getting filthy. I would love to do one like that, but I'm not doing this for my sake. I'm doing it obviously to get more people involved and just see like the merit in some of our posts. I don't even know if I'm gonna like doing this. I really don't like. I think if we're all doing it together and getting people involved, and I'm not doing it in hindsight and posting results, it'll be more meaningful. But I think 2 to 5K is what a minimum we should do. My whole mindset is I'm trying to bridge the gap between these kids coming in the markets thinking they're joining these groups and getting, useful information, and they're just learning how to gamble and the worst techniques and approaches to the market, and they don't have that type of money. But I'm going to keep doing this group. I need to get those people because it's not at a place right now with the group where I'm making enough money that it's worth the work. I just know that the product and workflow, the product is great, one of the best I think available to retail, if not it's one of the best I think, but I'm in a good workflow with everything now, and if I don't see it through, like I'm like crazy with this stuff, I need to get this to where I know it can be, and that these idiot LARPers can get these massive groups without a good product. That's the only reason I'm still doing this. I want to see how far I can take this before I quit. My wife has wanted me to quit this for so long because it's not the same type of trading as when I was trading on my own. This was like a COVID side hustle that's evolved into a lot more work, but I was always at my desk most of the days, but it's a lot harder for me to mentally leave my desk. Yeah, that's why I wanted to do the account. Get more people involved. VIX is not going to ever tell you if something's cheap. It's based on SPX. VIX is going to tell you the expected move for the day, based on SPX. How do you tell if something's cheap? Well, you go down the fucking rabbit hole and spend hours and hours of time studying how options are priced, and then you figure out what you think the option should be priced at based on whatever things you want to base it on. And then you trade them and figure out you're wrong, and then you go back to the drawing board and do it all again, and you do it that series of, that cycle a ton of times, and you hopefully get something that works based off something that's quantitative, not just it looks cheap. I do all my work is we score paths, we score how the options are priced in relation to those paths and whether or not it's a good deal or expensive. And it depends on the regime. Like if we're in, like I said, the core of my work is the market pinned, is the market moving, is the market able to, realize some of these outcomes, or is volatility and dealer positioning not really accommodative to that? So even if something might be cheap on Apple or something like that, I don't want them to take a risk like that, especially on something that's going to be moved by indexes so heavily, unless something checks all the boxes. Cheddar Flow is just showing you a bunch of orders that are like over a certain amount of premium or like opening or some shit like that, and like I mean, let me ask you, how do you think that's helpful? And you said, what am I doing? So I'm taking I have data from every single order that's executed. We plug that data in and we organize it, and we are organizing it to try to create what is the dealer holding based on these orders, and there's ways to do that, volatility nodes, different things like that, and you have to match every single order up. Is this a buy or a sell? And it gets complicated because there's a lot of mid prints, and you have to know that's like part of the IP, like how you organize that data. But knowing that there's a lot of open interest on something is utterly meaningless. The net impact, I would say that, like, the net impact of all those orders could end up being nothing. Like some strike, this will never happen, but some strike with like 200 open interest could end up being more impactful than that. That'll never happen, but I'm just saying in general, like, you don't know enough information just knowing that options were traded. You have to know where, on what side of the bid ask they were traded, and who's trading them, like what exchange, like who owns these contracts. Is it the person warehousing the risk, or is it the person taking risk or hedging or expressing a certain thesis? And then you want to aggregate all that data and see what the summation and all these theses is being expressed. What is going to, out of everything being expressed, where is the market maker inevitably going to have a bias towards? Because they don't have a bias when they come into, if they had no positions or whatever, they're forced to have a bias indirectly through the risk they warehouse. And yeah, Cheddar Flow doesn't do that at all. They're fucking retarded. You're just seeing a bunch of orders that like bunch of smart money flows. Like, you're just seeing, here, let me pull it up. I'd randomly look at it throughout the day just to see. Just tell me how this helps you. Like, let's look at, okay, when the market goes up, they buy calls. That's good to know. What if the market turns down from this spike and they just bought calls? And that's what happens usually. When the market goes down, they buy puts, and that ends up making the market reverse because the dealer short these puts and yada yada yada. It's not like you can just say that every time. And sometimes we're in a gamma move, and these moves get exaggerated by these positions, but you're not thinking about it like in the right way. Like, this is just all throwing darts. Like, all this stuff doesn't matter. And if it matters to you, tell me why. Like, I can't find any reason this matters. Like, this is one order that was executed today. What are you going to do with that? You didn't trade out that? Good luck. What's good, Lewis? It's been a minute. Yo, are precious metals still on your radar? No, man. I haven't looked at them in so long. Thank God I haven't looked at them. I'm always like, they're always on my radar, man. Like I'm just not I don't know. Like, I'm just not interested in dealing with this setup right now. It's fucking. Yeah, this setup's ass, bro. I'm gonna wait. I haven't seen anything that has made me want to look at it. I'm waiting until like I see some flows pick up or something. There's just nothing going on, man. I took that. I mean, I think you were still in with us back. That's like the last I've looked at metals. Back by like April, I think. I'm starting to look at emerging markets more though. Yeah, Lewis, the problem is, you know, if this higher for longer, this period, like, ends up lasting all the way through 2024. And, I mean, that's also a problem I may face with my energy longs. Like I was talking earlier today, like, I don't think this energy trade, it could end up being like the start of the next leg, but yeah, I don't know. It's looking more like it's a trade, and it's taken a ton of time, but it was a great move. It's just not a lot of things that I'm looking at are starting to make me expect this to be more painful and take a lot longer before it ends. I don't think we've gotten really even into the meat on the bone of the bubble. I mean, energy could take off during that period, but if that's the case, there's probably better bets than energy. Yeah, so as far as, you know, this quad chart I look at, we're still right on this 21 period exponential. Got briefly above, like I said in the beginning, you can get briefly above if it sustains above and we start getting momentum, which we still can. And let's, you know, tie that into positioning. And then we also get above 4455 SPX. Then things are starting to perk up. Here, it's still a possible zone of rejection, and I'd ideally like to see one more tail into 4440 SPX minimum. This day and this week, like since the beginning, since Monday pre-market, I was like, this week looks like it's going to be fucking annoying. Like this is a hard week to trade long vol. And today, I mean, you had to take it in the morning. The only trade off I wanted to take on that spread, I missed while I was ranting. I'm as far as straight delta, I'm still in the calendar swap, but you really have to, on these trend days like this, you got to be in the move from the get go to really reap the benefits or overnight. Yeah, I have views on it, but I'll say what I have context on and data on. And in terms of September OPEX, I think we're in the midst of a pullback. There was a chance it was complete yesterday. We failed to follow that path, and again failed this morning when we broke below 4480. It doesn't mean danger, like something's breaking. It's just the pullbacks. We're still in the pullback. Once this completes, barring a break and sustained break of 4435, 4440, which I don't think is the likely outcome. We have unfinished business at the 4500 magnet this week. If this turns tomorrow, we could start working towards the first major OPEX target, which is 4540, 4550 SPX. How flows change on that approach, if that move even happens, it's going to dictate whether that is, the target. But I would suspect if we get that move sooner than later, it's going to go over that target, and that'll be the end of this move we've seen during the OPEX cycle. We're going to go through some sort of pause, most likely for about a week and a half, probably shorter than that actually, post OPEX, or starting towards the end of starting like the last couple of days into OPEX. And then I have a lean on what path we take after that. It's not something that I would post about yet, because I really hope we sell off first before what I expect to happen in Q4 happens. I really hope we sell off. I will say I don't think the market's done yet. I don't want to incorporate things that they've never been. It's good anecdotal evidence. I don't factor them in. Try to stay purely data dependent. Mika, yeah, we're gonna go live. Trying to go live twice a week. I'm gonna try to build up to going live like pretty regularly. I'm here all day. The issue, like I said earlier, is I end up talking, and like as I'm talking, I'm not looking at what I need to be watching, and I'm saying I'm going to take a trade at this instance, and I just don't take it because I'm just talking, and I have a tendency to rant, go off on little tangents. So that's the problem. If it's a busy day and I'm not really paying attention, and I can just stop talking and shut the fuck up, and I gotta be good at that and throw some music on or some shit. But yeah, I look at macro stuff like that. Like I know what is going on with seasonality. There's always macro headwinds, man. All year there's been macro headwinds. If you're trading off macro headwinds, you had a shit year. Ben L, to explain how I have been approaching the market, I will continue to trade the flows on these OPEX to OPEX cycles, and until something breaks and I am forced, due to what I'm seeing in positioning and flows, to be super bearish, I'm not staying bearish for any prolonged period of time besides, trades here and there. So it's like innocent until proven guilty. Like, this market is going to keep going higher until it breaks. And until that happens, I have no reason to speculate that it's going to break in these windows. Unless I have, maybe I have enough reason to be in a short, but I'm not going to. Anytime I've tried to outsmart the market this year have been, the windows where I've lost money trying to get too cute. I'm going to stick to what's been working and stick to the flows and not try to predict, what's going to happen. I want to let these regimes, change under the hood. And I usually see these phenomenons happening, and there's usually precursors, but before we get these really dangerous states of fragility. And I haven't seen, but it's also been dangerous. End of August, granted I was off the desk for a doctor's appointment and doing a procedure. I didn't really expect that to be as volatile as it was, and there were macro headwinds. There was macro positioning happening there, and that was dampening the flows. That's gonna happen though. It's overall, I don't want to focus on speculating that much. I always have a thesis. I obviously think the market's gonna go this way for this long and until this happens, but that's my opinion, and it's not really tradable unless I have enough supporting evidence. I'm not a macro trader. I don't want to be a macro trader. A lot of pain and suffering being a macro trader. Mika, it was a spread. I don't really like to buy at the money options unless it depends. I don't really like to. I like to take advantage of convexity. I want to buy 0.2 to 0.3 delta and then sell around 0.7, so that if I'm wrong, I lose small, and if I'm right, my payout is exponential. If I'm buying at the money, I'm selling out of the money then in that case, and it's only because I expect the move not to be as steep or have too much optionality to it. But generally I wouldn't even take that trade. I would use ES underlying to trade it. Yeah, I mean, if you go on Twitter, you're going to see and find out that the world's ending in a very short period of time. But if you go to money managers right now and kind of have an ear to the pavement, you're going to hear a completely different tune. And go, look at some other things. Look at how much liquidity is coming into the market through reverse repo, things like that. The liquidity was going up at the end of August. Liquidity is not decreasing. The market is in danger. The danger arises when there's a lack of liquidity. That's where dangerous moves can happen and catch everybody off sides in a short period of time. There has not really been a lack of liquidity this year. We have not been doing any QT this year. Quite the opposite. When we actually start doing QT, it's going to be a decrease in liquidity, and that's when they turn the spigot off. Mika, I take naked options all the time. I trade I trade normal straight delta options the majority of the time, but I trade them in terms of my expected move and where they're priced on the market and if that's a cheap or expensive contract. And it's not always like I'm getting the best deal. Like we're in that Carvana trade, and I know it's not the best deal, but I know the outcome. It's possible that, you know, it's a kind of a binary trade. Like it's either going to be a zero, or it's possible that we hit, you know, that part of the book where there's a lot of thin air. Yeah, lottos aren't like how I make all my money, but if I trade a lotto, it's because I see that the odds of, you know, it going over 177.30 with the IWM yesterday, it might not even be probable, but it should be more expensive than where it's currently priced. I don't think I have an Atenberg option book file. I have some really good books that you're not going to understand if you want to see them on term structure and skew. I mean, I've tried to get in front of the market all the time throughout my career and this year, and it's going to always happen. And I usually get hurt after I get in front of the market and I'm right for a long period of time, and then, you know, the time after that I end up being wrong. Gotten better at not making myself hurt as bad during those times, knowing that I'm trying to get in front, but it's always going to happen. I mean, especially with how I trade, like I'm trying to predict something that hasn't occurred yet. And a lot of the time, if I'm things go great when they're going good, and then when that stops working, I have to make sure I'm wrong quicker and understand that path isn't unfolding and the conditionals weren't met. Do I find more success with directional trades? I'm a directional trader. Credit trades are still taking a direction, unless you're like market neutral. But overall, I gravitate more towards straight delta directional trades, or, you know, not complicated spreads, but the trades that I can go very, very large on and have exponential payouts are more complicated, a bit more complicated, nothing like crazy, but like swaps and calendar swaps and trades where your risk is the debit, but your payout could be, you know, hundreds. Options just give you the ability, if used the right way, to really mitigate your risk and have exponential payouts if you know how to express theses across time and strikes. Do I find more success with one or the other? I at the end of the day, I'm always trading directionally. Unless, I mean, that's not true. There's periods of time where I don't think anything's going to happen. And I find myself more likely to exit those trades early that you need to hold if I'm trying to like do condors or something that's really neutral. My personality does not gravitate towards those trades. I don't like sitting here waiting, and I don't manage those trades mentally as well. I like long convexity. I like fat payouts. See, now we're getting above here. We are testing above 4455. Checking in on the group. I don't think anyone's asked anything. I'm gonna hop off here pretty soon. I just want to look over some work. Yeah, thanks for joining us, Mika. We're gonna try to do these more often. I was thinking like Tuesday and Thursday, but this week was holiday week. Yeah, I want to do some live trading. I can type out what I'm seeing and what I'm looking at, but I'm sure it's definitely more helpful to hear from the horse's mouth, and it's something that's constantly evolving. Most of the days, it's a very dynamic situation. I could type something out, and by the time I'm done typing, it could change, which it's just a lot of typing sometimes. So we'll see how it goes. I'm still on here for a little bit longer. I'm gonna be off by the time 2:30 rebalance starts though. OSTK 22.5 call sweeps. Roku, they're starting to flip the script a bit. Type this readout real fast. I just posted a read on Roku. That's the thing. Like, I don't agree. You should stop. You should focus on trying to make money, and that be the holdup. Like, I know that's what you're gonna always think, but you want to learn like what you're doing, and I'm not gonna be able to teach you that. Like in general, like you can take a small account to, huge returns if you know what you're doing, and that just happens not because of chance or you hit a couple good trades. It happens because you have something you can repeatedly do over a period of time that has some degree of edge. But yeah, I totally understand. I know that's like an issue for a lot of people that want to get involved in the service. And at the end of the day, I still think the value in knowing some of this information it's pretty cheap for what we're offering, and I don't think anyone's really offering this information. I know one person that is now offering it. That you're probably gonna see me on Spaces with this guy pretty soon. But yeah, if you guys are ever thinking about joining, we just had that promotion. I can honor those prices. Still, just let me know. I can send the link. Yeah, Wizard of Ops. We just were talking over the weekend. We are toying with the idea of a partnership. We have an open dialogue, see what makes sense. I'm not expecting this move at the moment. Let me see. To sustain. I know our models are different for sure. And someone from our group brought him up about a month ago, probably like 2 months ago, but I didn't really take a look into what they were doing until a month ago. They've done some incredible work over there because it's really hard to create a platform, and he's changing it into what it needs to be to really understand some of the intricate, like it's a lot more complicated than like what's displayed there. I know he's interpreting it with more information than is being posted, but it's really hard to have a client facing tool that shows any of this information. I think where our models lack, his model is better during those periods where the context we think we're taking from the back end and longer durations, and when it's not impacting as much, the 0DT stuff is really controlling the boat. But there's a lot of times where I think we're able to ascertain what movements are going to happen a little bit earlier. I haven't looked at his work long enough to really see. But from what the person that has been involved in both, that's what they mentioned when and what periods, and that's my best guess as to what the difference is. And yeah, there's like knowing what the data is saying, and then there's also applying it, which I know they don't really, I think they're going to start trying to go into, but they don't really have anybody per se trading it. They're looking more, like we're looking at the distributions, but they're focused a lot, like solely focused on the distributions. We are too, but we're just trying to figure out and score the paths that and the interactions that take place between the larger edges. And then on top of that, when does opportunity arise from that path? Like where in that journey that price is going to take across time and spot is there an opportunity to take a high confidence trade? But I love their work. They clearly got a great back end team to put that all together and compile that information. The updates, it was funny. Like I was like finishing, I would interrupt and say something, and then he'd show me their updates that were exactly what I was saying they needed or was asking about. I actually had to put a note. I gotta follow up with them. Yeah, we don't offer access to our model, like our IP, like they're showing. They're not showing like all their IP, but I tried to do that like a year and a half ago, and we were just banging our heads on the wall because I mean we didn't want, how they've done it is perfect, like in my opinion, but we were trying to make it more of a signal, and it's really hard to create like a binary signal when there's so much data to interpret and how that changes across different paths. It's like a constantly changing signal at times. Be right back real quick. All right, guys, I'm gonna hop off here. I want to go look through some of my work, but thanks for tuning in. All 6 of you still here. Shit. All right, we're gonna try to pump those numbers up pretty soon. All right, take it easy, guys. Good luck.